Not all spin-offs are created equal. Back in February, Henry Schein merged his animal health business with a company called Vets First Choice, then spun off the combination as Covetrus. Candidly, the stock has been a disaster. You'd think that distributing animal health care products would be a low-risk business, yet this stock just kept proving you wrong. Covetrus plunged from the 40s in February down to the mid-20s by June. Then in August, the company reported a truly abysmal quarter with a surprise loss. Stock immediately plummeted to the low teens. I got the impression that these guys just weren't ready for prime time. Maybe the merger was too complex to digest. Stock getting hammered, falling to high single digits late last month. And that's when Covetrus decided, we got to make a change here. Board pushed out CEO Benjamin Shaw, replaced him on the acting basis with the chairman at the time, Benjamin Wolin. And, man, it has only been a few weeks, but the Wolin era is already going a heck of a lot better than the Shaw era. Earlier this week, Covetrus reported another not-so-great set of results. This was a real clear-the-decks quarter. Management wanted to get all the negatives out of the way as soon as possible. But, and this big but, they also guided for low single-digit organic growth this year, which was better than feared. In response, the stock caught fire, up nearly 50% over the last few days. So can this thing keep climbing? Let's take a closer look with CEO Ben Wolin. He's the acting president and CEO of Covetrus. Learn more about his company and where it's headed. Ben, welcome to Mad Money.
Good afternoon, Jim. Happy Friday.
Same to you. Okay, let's just clear the decks. Brand new company. Just you telling me why we should buy Covetrus.
Well, Jim, Covetrus has over 100,000 customers in a massive and growing market that, as you know, the animal health industry, $45–50 billion plus, growing mid-single digits. We have a unique set of capabilities across supply chain, software, pharmacy, and I think we're uniquely positioned to take advantage of that opportunity.
Okay, now, there was a sense of initially that, well, let's just say things weren't ready for prime time. And you said right in the conference call that you just had, November 12th, first of all, us here need to acknowledge and take responsibility for the very difficult and challenging entry and early life we have had as a public company. We underestimated the sheer complexity of the transaction and many competing priorities. Are you solving those issues?
Well, Jim, it's 3 weeks in, but we're starting to make progress, and I think that I think the first thing to do, especially in this day and age, is acknowledge when you don't get it right. We didn't get it right. We had too many initiatives, and I think it's important to note that when we did the merger, I listened to your intro. This wasn't a merger of two companies. Vets First Choice merged into Henry Schein Animal Health, which was really 30-plus companies. So. It's not surprising with all of the competing priorities that, the company had challenges, but long-term opportunity still exists. We just have to, we got to slow down to speed up, and I think we'll be able to do that.
Now, I checked the balance sheet. Obviously, you have some debt, but nothing new, nothing that comes due. I think you have the cash to pull this off. What I'm trying to do is take the disaster scenario off the table so that people who care about the humanization of pets theory, as I do, can feel comfortable that at least you got a lot of time here.
Yeah, I mean, look, you've been at the forefront of that trend of the humanization of pets. That plays right into what we do. I think you see that across many different categories, and we're a leader. We supply preventatives to vets, chemotherapy solutions, pain management solutions, and we help vets, practice better medicine. So I think we're in the right spot, but clearly we had a lot of work to do in order to prove that we can do that.
Okay, so every day we give NVIDIA, my elder 13-year-old, let's just say Mutt, a Covetrus pill. And I said to myself, how bad could this company be, for heaven's sake? That is a fantastic business. It's payer. We pay the vet. We would pay anything for our dog to be able to have a longer life. We use Covetrus. I'm sure that people at home, if they go look in the medicine chest for their animals, are going to find Covetrus stuff.
Look, I agree, and I'm glad that you're taking care of NVIDIA. That's good to hear. And yeah, we over the last 10 years, the number of solutions that we're providing to our pets, just continues to increase. And as that market grows, Covetrus is really well positioned to take advantage of those opportunities.
Okay, I want to be sure you took a pretty big charge. Are those behind? Are those behind us? Because they intimidate people. I know that a lot of it was non-cash, but it still intimidates the investor that we have who's not hedge fund managers.
Look, yeah, it wasn't a small number, as you pointed out. It was all non-cash, and it was really reflective of the stock price drop that you mentioned. I mean, we started at 40, went down to under $10 for a sustained period of time, and when you have that type of stock price decrease, you take one of those charges, but has nothing to do with the cash on the balance sheet, has nothing to do with our future opportunity. And I think that, we're well poised to have that type of information behind us.
Well, look, I'm glad you came on. Yes, humanization pets is our theme, and we're looking for more names, and yours thing has come down a lot. Let's leave it that way. 3 weeks. Congratulations, new job, and we'll be talking soon, okay?
Thank you, Jim. Thanks for having me.
Okay, that's Ben Wolin. He's the president and CEO of Covetrus. Remember, we used to have Henry Schein on. They had this healthcare business for pets. Spun off, merged with another outfit. Obviously, a lot of moving parts. Sounds like they're getting out of control. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.